Welcome again. This time is always earnings seasons and Q3 seasons, and we picked out 6 stocks that came with remarkable figures this week. It's Thursday afternoon. I have to correct myself because we have 5 companies with figures and 1 company that was also in the news but doesn't came with figures. And we do it. We change them. I have 2 negative ones, and I wrap up with a positive one. But you want to start with the only one that wasn't. What's in the news, but
without earnings, and I have 2 positive ones and 1 negative one.
Yeah,
no, let's start with Shell. Martin and myself, we were last weekend in Portugal, and we spoke with a lot of people, a lot of investors, and also people that are not investing. And of course, the worries in the world nowadays, we are concerned ourselves as well. A lot of people, some people selling stocks because of that. On the other hand, people, for example, with Shell, they see that actually their investment has increased a lot, also related, of course, to the oil price that normally goes up in difficult times. Analysts say that the oil price can even go up a little further than the 150. So, of course, if you sell your shares because you're worried, you have to see what shares you hold, and maybe actually they are doing quite well. Shell is actually one of the shares that is doing quite well. It's at the highest point ever, and it's a very important company. Of course, in the Netherlands, a lot of investors have it. It's trading above 32. Normally, it's always within a range 22, well, not always, but 28, and now 30, a lot above the 30. They had good news yesterday. They made a deal with the Qatar States company and for the delivery of liquid natural gas to Europe. So actually that was positive news for Shell in a negative market yesterday. But everything to wrap up, Shell could actually be a good investment at this time in difficult times, related to the oil price. People that have it in their portfolio, I think they have the dividend. They have
if you want to invest in such a company. Of
if you yes, yeah. And of course, if it has the result that it has now, of course, people also can think and take some profit. That happens also.
ASML, Dutch company. A lot of private investors love it because they make something. In short, a machine that makes chips. They don't have a lot of competitors. We spoke about it in previous ones. And they came with earnings, and the earnings were quite okay. The revenues, the profit margins were all okay. And still the share dropped 3.5%. The day after it really little bit recovered, but it went down. And why did it went down? Because the orders for next quarter was expected of a value of 4.4 billion, but was only 2.6. They have enough to do with ASML. They have enough to produce. But it's really important how big is the pipeline. And the pipeline is still above 35 billion. But it's, of course, it's not a good sign if the pipeline is getting a little bit less busy. They said that 2024, so next year, will be a transition year. And they will change some things, and they will say that the revenues will stay the same. And the investors are used to higher revenues, higher profit with ASML. And if they now already pronounce that the profit and of the revenues for next year will be the same as 2020, people don't like it. They said after the transition year of 2024, 2025 and further, will show growth again. You can look it up on the internet, look at their expected growth figures. So the long-term goal of 35 billion in the pipeline, they keep that, but for the midterm, they are facing some problems. On the other hand, Taiwan Semiconductors came on Thursday, for us it's Thursday afternoon, came with some positive news that they say, okay, they see that the decline of the market is become to an end. So it's increasing a little bit, and of course they see it first, and those companies start ordering machines with ASML. So I hope that ASML is wrong and that they can already 2024 is already better than the transition year that they expect. If you look at the stock market, at the price 564, they were at the top this year 675, so quite lower, not a sell at the highest point, and the highest price ever was 704. So I think still a beautiful company, but take that in consideration if you have the stock or when you want to buy the stock.
The markets don't seem to like a transition year, those kind of news.
No,
they
no,
don't like it. Must always be higher and more.
More, up.
Exactly. Well, speaking about up, Netflix. Yesterday they had their earnings and the share is now trading 15% higher.
15.15. Yeah.
We 1.5, yes. We were already expecting it because in the pre-market trading it was already around the $400. And today, Thursday afternoon, it's actually trading at this 15% higher. We always have in our office a lot of news channels open on the TV, and CNBC, I will show you later, had a nice picture. The revenues, they were in line with the expectations. The earnings per share, they were actually better than expected, 3.73 against 3.51 expected. But I think the main news was the high amount of new subscribers. That's now in the third quarter 8.76 million, and planned for the whole year is now around 20 million, and that was in 2022 only 9 million. So that is a very good performance. They say or they think that by canceling the possibility to have multiple users on one account, that is the reason that people decided to contract their own subscription. Actually, you have to subscribe to our channel, the YouTube channel.
Oh yeah, you subscribe. Yeah, we wait.
Please.
We wait. Yeah.
But they manage.
And why should people subscribe? Because when you subscribe and we have a new vlog, automatically you will get a little sign that we have uploaded, so you can see it.
So
directly.
please do that. But Netflix, they managed to have a lot of new subscribers, 15% higher. And the market is very positive about it, because like we said, they managed to keep the users that were using the multiple users that used one account. Yeah. Also, they managed to raise the prices. So, for example, in the US, the most expensive contract is already at $23 per month, $3 higher. So it's not for free to pay a little bit, and now it's maybe at $23. It's like an internet contract, or a phone bill. So they are very well, they are good now in attracting new clients and to raise their prices.
A company that doesn't raise the prices, a company that lowered the prices, is Tesla. They came also out with the figures, and it was the first time since July 2019 when they missed the outlook. And of course you can say, okay, but that is the analyst, what they think, okay. But that's how it is. Mm-hmm. They missed it for the first time and the market doesn't like it. The adjusted earnings was expected 73 cents, it was only 66 cents. The operation margin went down at 7.6, was 7.6%, and last year 17.2. The revenues was 24 billion, expected was 23.3. So overall, it wasn't that good. But probably, as you know, as an investor of Tesla or a person that follows Tesla, Tesla has a strategy to lower the prices so they attract more clients and they accept less profit, but they have still much more profit than the other car companies. In the calls, so with the analysts, it's always the question since the last quarters, when will Tesla deliver the trucks? And now they said on the 30th of November that it's going to be a big day, and they expect to speed up with the production. But they said on the other hand that the first year to 1.5 years they won't. It doesn't benefit the cash flow. So also people didn't like that too much. And if you look, and it's of course it's a tendency. So you can still say, okay, they sell more cars every quarter. But yeah, if the bottom line quarterly net income drops, and I have a chart here in my screen, and I think we're going to show that, it says something. So there has to be a turning point in that. Mm-hmm. It should be, or not a turning point, but stays the same level. So that's interesting to see, and I think a lot of analysts are focusing on that. On the other hand, except the cars, Tesla also does something in the energy business. The storage increased with 90% on a year-to-year basis, but their solar business dropped 45%. So that's also not a really strong sign. It's not an important part of Tesla so far. And if you look at the share price, the market didn't like it. Minus 8%. And that's a lot. It's not trading, of course, it's a volatile share. It's not trading at $222. The top was almost 300 this year, and the highest top was almost $380. So, if you are an investor, make your decision if you like the strategy. If you're not an investor, decide what will be the right moment to step in. Volatile share. And I close off after this with a share that has a really positive result.
We are not too
nice special company.
positive, although my two shares, Shell, were quite positive, Shell and Netflix, but my third one, Nestle, is not too positive. Also, they presented their earnings. The sales growth, it was expected 8.1%, but it was only 7.8%. And the market didn't like that. The share was down this afternoon over 3%. For such a company, you know, Nestle, it's from KitKat, and everyone knows the company, of course. Also, the growth of sales, it is mainly due to the inflation. So the prices are higher, but the sales itself, it was less than expected. And also a big part of it is still the higher prices, which has to stop somewhere. So unfortunately for Nestle, it was not a very good day, such as for Netflix.
SAP.
Positive.
Positive. German company, founded in 1972, a great year to found persons. They have around 450,000 clients all around the world. They're concentrating on storage and all kind of solutions within the work environment. Really tech company, a German tech company, one of the biggest German tech companies, one of the biggest Europe tech companies, so not an American tech company. They have a market share of 142 billion euros, quite big. And I think it's a special company. They have 69 data centers in the world. They have 20 labs, SAP labs, and they reported over the last quarter that they bought 3 AI companies, and they are more focusing on AI and data. And it's also. We saw on CNBC, so the same news channel where you were referring to, is the CEO. The CEO is Christian Klein, and he was wearing a brown shirt and suit, jacket, and he is quite young. So we looked it up. He's 43 years old. He is already in the board of directors since 2014. He started as a chief controlling officer, and he's already the CEO since 2020. So it's really young CEO for such a big company, but he has a really good attitude. Look him up and look at his videos. And I think that's also a symbol for the culture within the company, because if you look at the culture, how it's rated, it's really high rated. And also the CEO, Mr. Klein, is really well rated all around the world. I think it's a really good sign that 70% of your people, of your employees, hold shares. And I think it's a really well organized company. So the figures were quite okay. Revenues went up with 4%. The cloud business went up with 16%. And the operational profit went up with 10%. The market liked that really a lot, because the share jumped 5%. And that's a lot for SAP, because if you look at the share for this year, the share after April didn't do anything. It's quite a boring share. Maybe it's a share for the future, but for the moment, it's the 5% jump today on Thursday is really a lot for SAP, because the lowest price since April, May this year was 120 and the top is 130. It always moves like this, quite boring. So that's why it was a remarkable jump with remarkable figures. The earnings per share is estimated for this year, so 1 quarter to go, is around €5. So that makes a profit, a PE of 25. So it's not a cheap one,
no.
But that's subjective. You have to decide for yourself. Dividend is a little bit more than €2. So also not a lot, but you get something. So it's an interesting company to follow, and I think it's if you look at the Europe perspective, it's a big, large company, and investors are not investing a lot in it because I think it's not exciting
No,
enough.
it's strange, no? It's
But you
a
want some
non-US company.
Yeah, you want some boring companies in your, and if you believe in tech and you want to have a portfolio in tech, you have always a lot of exposure in dollars. And this is a euro company.
Interesting.
So interesting week. Unfortunately, with on a macro scale, a lot of negative news. And we hope that there will be solutions as soon as possible for everybody. Earning seasons, and we highlighted 6 companies, 5 with earnings, and we hope we inspired you a little bit to help you with the difficulty with investing.
Thank you very much.
Thank you for watching. Give us your